So understanding the difference between a pre-qualification and pre-approval, I'm going to explain the difference to you, but still, a lot of times you guys are looking at letters and you can't tell because they'll say pre-approval when really they're just a pre-qualification. So understanding the difference between the two, what questions to ask so that you can validate the information, but then understanding why it's even important that you know the difference, that you ask the question so that you can find out if you're dealing with a pre-qualification or pre-approval is super important. I think it's even more important now than it's been in a long time because there's a lot of folks that are in the business that have been in the business for just about 2.5 years. And business was a lot easier and a lot different than what it is now. And so if you've got a newer person in the business, or you've got a company that you're working with that quite honestly is desperate for business, then I don't know any other way of putting that. Then it's possible that you're not looking at something legit. They're just trying so hard to get the deal that they'll say or put whatever on paper. So knowing what questions to ask is so important. So what is the difference between the two? We're going to talk about that. Credit issues, income issues, asset issues, high tech, high touch, how the artificial intelligence and technology is being integrated into the industry. But what do you need to know in order for it to still be a people business? Because at the end of the day, we are working with people's lives. So being able to merge those two and what to be looking for in regards to that. And this will play along really well with what kills the deal. Because if you don't know the difference, or you aren't paying attention to the gotchas, you're going to have a deal fall apart at the closing table. And you will think everything is just fine until you get to that point. And a lot of it is, there's some things that you guys can be listening for and watching for as the eyes and ears of the lender, where you could give us some heads up so we could fix some challenges before they become challenges. So the goal of the class today is just for you guys to have that education. And our mission is to get more people to understand why it's important that they get pre-approved, not just have their credit pulled for a pre-qualification. If you guys can explain that to the buyers, then you can help them through their frustration of trying to gather the paperwork that's necessary for a full pre-approval. If you don't understand it, while they're bitching and moaning and complaining to you guys that the lender is taking so long, or they don't have answers, if you know to ask back, well, did you provide the paperwork that they required or asked you to provide? Are you having some technology issues with getting it safely uploaded to the system? What's going on? What have you done? What have you not done? And how can I help you get it done in a timely manner? Because though the market has slowed down, sometimes we see some of these houses come and go pretty quickly. So while somebody is working on their pre-approval, a house that they really wanted could be under contract before they get it done. And then they get frustrated. Typically, you guys will hear them complain to y'all. They won't complain to us because we're the ones that are holding the money. And so it's just kind of like, typically, if I get frustrated at my doctor's office, I'm not going to voice my frustration to him. I'm going to probably voice my frustration to the nurse, right? There's just something about that communication they don't feel as open to complain to us as they would for you guys. Instead, what they'll do is ghost us. They just won't respond. So you guys being the eyes and ears and understanding this is really important. And then most importantly is to help keep you guys from losing a deal at the last minute and not wonder what happened. How did this happen? How did we not know these things? So basically the difference between a pre-qualification and a pre-approval. Does anybody have any questions at this point? No, okay. A pre-qualification is typically just a conversation with the customer, with the buyer, with the borrower in our case. They've completed an application, we've pulled a credit report, and sometimes that's where it stops. Do you guys know how much it costs to pre-approve someone from a lender? From all the reports that we have to run and the minimum amount of time that it takes to do a pre-approval. Do you know how much money we spend for pre-approval? At least $500 per customer.
Wow.
We are in each transaction, by the time we pre-approve someone, $500. So anything that you guys can do to help us get a commitment before we start doing all of this work, or if the conversation comes up and says, I saw numbers from Guild Mortgage and their numbers look higher than what I was seeing with the other person that I talked to. There's another class that I have that really helps you understand those numbers are third-party services, and there's very few third parties that we all use. So the numbers are always going to be the same. Where the difference in the numbers are always is in taxes and insurance, and we're always going to be accurate or on the high side when we're estimating taxes and insurance. We all get our interest rates from the same market. We are all based on the bond market. The bond market changes every single day. We have CPI numbers coming out. Some people are going to hedge it one way or the other, mortgage company, but when it's all said and done, if someone were locking their rate, if they were locking their rate at the same date at the exact same time, you will find lenders only vary 1/4 to 0.5% at the very, very most. But people feel like they're getting a better deal somewhere else because they don't understand the numbers. And if you guys don't understand the numbers, how are you going to explain it to them? That yes, you may feel like you're getting a better deal somewhere else, but all of the numbers come from the same place. They're just estimating them differently. Or they don't understand how much insurance is in Texas. Y'all, I was in Mexico with a group of my colleagues the other day, and we were talking about the different price points across the United States. And in California, you could have $1 million property, and the payment on that $1 million property is going to be equivalent to a payment on a $500,000 house in Texas because of the difference in taxes and insurance. So if you're dealing with a company that is on the other side of the United States, when they go to estimate taxes and insurance, they have no idea that Safeco's pulled out of Texas after this last hailstorm. They have no idea how many insurance companies won't even write in Texas because of the risk, which means the risk means higher premiums. Our premiums are already high and they're going higher because of all of the natural disasters. So, and then our taxes. I go around and ask people all the time, what do you think our taxes are in Texas? Our property taxes. They're shocked that our property taxes are almost 3%. That blows them away. So most of the time when there is a difference in pre-approvals or numbers from one place to another, it's in those figures. It's not because one company is higher than the other. When you go to the closing table, those numbers are going to be within 500, maybe $1,000 difference, and interest rate's going to be within 1/4 to 0.5% difference. And I don't care who you compare that to. That's just the way the industry works. So it takes a lot more work to do a pre-approval, but it is the only way we will ever send a home buyer out house shopping with you because we care about you. We respect your time because time is money. So we're going to spend that money to get them pre-approved. We're going to have a conversation with the customer. We're going to get their information. Most of the time, we're going to have them do their application online. We're going to pull their credit report. We're going to run all of the automated loan approvals. There's several different systems that we'll work with to see where we get the best approval. And then we're going to have them upload all of their paperwork to us. Actually, we're going to get their paperwork first. Validate, verify, and confirm everything that we've received. And I'll explain a little bit more detail in the next class on why this part's important. After we do all of that, then we're going to see which loan programs would fit their needs and their budget and their scenario best. And we're going to run all of the different approval options so that we can present them options. And each option is going to have different costs associated with it. Some cases we might be able to get them on a grant program to help with the down payment, because a lot of people right now, unless they have a house to sell, they're struggling to come up with the money they need to buy a house. So we're going to put a scenario together, and it's going to take us an approval, a pre-approval from the time we get, I mean, we're 4 or 5 hours minimum into a pre-approval and a minimum of $500. But we're committed to making sure that you guys are not out house hunting with a pre-qualification, because a pre-qualification is not worth the paper it's written on. You're wasting your time. There's too much that has not been looked at. Pay attention, chats, because I'm not. Now, in Texas, a pre-approval letter, there is actually a legal promulgated form or verbiage that has to be included in the letter. I see letters all the time from other mortgage companies that are not the legal promulgated letter. No big deal. It's their issue, not yours, but you need to know what to be looking for on the letter. This is it's a really fine print since I can't expand it. But I'm going to tell you some of the things that you should be looking for. A pre-approval is not, you know, on your financing addendum, it says that credit approval in X number of days, right? It does not say underwriting approval. It says credit approval. So if you're looking at a pre-approval letter and it says that the income, the assets, and the credit has been verified in writing, it's a pre-approval letter. And those letters should state that in credit. If it does not say that the income and the assets and the credit has been verified in writing, it's not a pre-approval letter. Okay. So that's what you're looking for in the letter itself. The reason that that is important, and then I received a contract on a house I was selling, and I called the lender and I asked these questions. How recent is the income documentation that you've received? Hey, Cheryl. How recent is the income documentation that you have in the file? How recent is your assets? Have you verified they actually have those funds in their account? I thought I fixed it where I can mute, but I can't. So, I mean, Ben, you can have a conversation with Cheryl. Just mute yourself. You might be telling her things we don't want to hear. Okay, cool.
It's his daughter.
Oh, well, oh, there's no confidential conversations then.
He's in my office and I'm trying to get all my stuff out.
That's so fun. And then you also want to know how recent the credit report is. The reason that matters is because we have to repull a credit report if that credit report expires before we're done with the transaction. So if that credit report is 95 days old, we're going to have a new or that lender is going to have a new credit report. Typically, your credit reports are good for 120 days, which is a long time. But sometimes it takes out, sometimes people have been house hunting that long. So you want to know that the information that they're looking at is current information. You also want to look at the date on the pre-approval letter. The date on the pre-approval letter needs to be current. And you also want to ask them if they have rerun the, it's called AUS, Automated Underwriting System. If they have run a pre-approval, run it through the system recently, because guidelines are changing quickly. So a loan that was okay 2 months ago may not be okay now. And then you also want to compare the interest rate to a current interest rate. Someone called me the other day, it was a Saturday, the letter was old, and the interest rate, she said, this interest rate doesn't look like right. It says 5.5. Well, interest rates haven't been 5.5 in a little while. And so I asked her the date on that letter. It was an old pre-approval letter. They were about to negotiate a contract on an old pre-approval letter. Y'all, my customer's debt to income was already at, it was like 45, 46%. at that lower interest rate. And now they bumped up in sales price and rates are up. That letter was no longer valid. And they were about to negotiate a contract based on that. It worked out, but it could not have. So those are the things that you got to pay attention to. Because if someone's not paying cash for the property, whether you're on the buyer side of the transaction or the seller side of the transaction, you want to know that the money is good. The money is going to be good at the day of closing. If you're on the seller side of the transaction, call the lender and verify this information. If the lender will not speak to you, that's a problem, because you're not asking anything confidential. You're just verifying the letter that they wrote.
What's the difference between conditional approval letter versus pre-approval letter?
So a conditional letter is underwriter has issued an approval and given conditions that must be satisfied for the loan to closing fund. And a conditional approval letter is greater than a pre-approval. So, good question though. Beverly asked the difference in a conditional letter or a pre-approval. Or, yeah, the difference in the two. But on your financing addendum, if someone has validated, verified, and confirmed all of the information, ran it through the AUS, and still get a favorable response, and your interest rate's right, and it all matches on that financing addendum, you literally should be able to put 0 days for credit approval, because a real pre-approval letter fully processed satisfies that condition on your financing addendum. I see these financing addendums all the time with 10 days and 12 days on a 30-day closing. That isn't going to work out. That means if that's really true, that people haven't provided the information that needs to be provided to make sure that they can even buy that house. So you really could tighten up the credit approval days. If you feel better, put 3 or 5 days, so it gives you enough time to validate all of this information, make the phone calls. This was just something interesting, and I put this chart in here because I want you to understand that age does really matter whenever it comes to credit scores. That's not saying that someone, between 18 and 29 can't have a 700 plus credit score. But traditionally, the average credit score per age is broken down on this chart. And the reason I say that is because the higher the credit score, the higher likelihood someone's going to get approved for a loan, right? So it really is, your first-time home buyers do struggle to qualify to buy a house because they're short their funds. They're typically just starting to make money, so their money is not maximized yet. Their income potential is not maximized yet. And then their credit scores typically struggle because they don't have enough credit history. They don't have enough longevity. And a lot of times they're a little credit heavy. Maybe they've got some student loans or they're living on some credit cards. So just to kind of give you an idea, I'm not telling you to start discriminating against people based on credit scores. I'm just telling you from an understanding standpoint some of the hurdles that some of your folks have based on average credit scores. We're going to go in a little bit more detail in just a little bit, but there's some things that no longer show on credit reports. So even if you have a pre-approval letter in hand, it does not mean that these things may not pop up on a title commitment, and that's where they'll show up now. That title commitment, the Social Security of the buyer is run by the title company, and these things could pop up because they're no longer always reported on the credit report. Bankruptcies still show on the credit report, but judgments have to be satisfied before a transaction be finalized. Foreclosures, we can sometimes see based on credit history that there's been a foreclosure, but not always, and it's not always going to show up there. Tax liens, those are no longer showing up on the credit report. And if there's a tax lien, it's going to have to be satisfied. And then short sales, sometimes we have to do the research on short sales. So we can see that there was a mortgage and it's not showing us paid off, or it's paid off but not the full balance. And we have to do the research. Because a short sale is treated just like a foreclosure in terms of when they can borrow money again. And it's specific to the loan program.
So are you saying that when you do your pre-approval and they do not have a property yet, that there are still some things that when the title company runs the buyer's information, that they'll find things that you didn't find?
Yes. So Beverly's question is that, can we still have things that pop up after you're under contract? And when the title company does a title run that could keep you from doing a loan? The answer is yes. Because the title company is looking at public records. Public records no longer show up on the credit reports. They stopped that about 3 years ago. So there's something that we do, again, part of the financial commitments for our pre-approvals is we will run fraud guard once we have a contract, instead of waiting until the title company pulls the title work. There's still times that some of this stuff will go past fraud guard and still not show up until you get a title commitment. But the bankruptcies will show up there. Property ownership, you'd be surprised how many people will say, no, I don't own any other real estate. And then when we pull fraud guard, we find other real estate in their name. Maybe they inherited part of a piece of property, or, you know, there's a lot of scenarios where we don't find out about other properties that they have owned until we pull fraud guard. Fraud guard also pulls all of you guys. So any party to the transaction, all of your public records will show up, not from a credit standpoint, but any filings, any grievances, any fraud that anybody that's party to the transaction has ever committed will also show up on fraud guard. So it actually does pull your licensing history and looks for the both the buyer and the seller and the loan officer and the underwriter. All of us with a license becomes part of that fraud guard report. It will also compare appraisal. We have to run fraud when we get the appraisal back. It's another filter for making sure that the appraisal looks right. There's a couple of different filters the appraisals have to go through, and fraud guard is one of them. So now, some of the income issues that could pop up, and this is why it's so important that a pre-approval is done correctly. There's something called variable income. So any income that is not exactly the same every single payday is considered variable income. The degree of variable income will be determined by why it varies. What part of variable income are we looking at? So commission is obviously variable income, right? So when someone is getting pre-approved for a mortgage loan and they have commission income plus salary, will the W-2 show a breakout of the salary and commission? No, it doesn't. So if your buyer worked at 3 different car dealerships in the last year and a half, we need 2 years of history to show that he's what his earnings have been for 2 years. Maybe he doesn't have 2 years. And so we're going to try to get away with showing he was in previous sales. He's been in car sales for 1.5 years, but we need to do a 2-year average of his 1.5 years of commission income. But we're going to have to get with each one of the car dealerships and find out how much commission income he earned. How much of it was spiff money on a Saturday afternoon, and the sales manager said, if you guys sell this bright green car today, I'll give you an extra $500. That's spiff money. That's different than commission. Or maybe the factory says, if you sell these pre-owned, these 5 pre-owned in the next 90 days, we'll give you an extra commission. That's not necessarily part of the sales commission. That's a bonus. All of this has to be broken out because we have to have a 2-year average to predict whether or not this 2-year average will continue for the next 3 years. That's our responsibility. That's what is required of us. So if your buyer is frustrated because we haven't been able to issue them a pre-approval letter in 6 hours, it might be because we're still waiting on these verifications that break out his income so we can do an average. It's not because we're sitting around telling jokes, because we don't have any good jokes.
What you're saying is commission buyers. That is a little more in depth.
It's very much more in depth. And then the question is it commission W-2 or is it commission 1099? If it's commission 1099, we're going to have 2 years tax returns with all schedules. If it's commission income and it's LLC, then we got to have the Schedule Cs, the K-1s, and the personal and business. We can't figure anything to determine whether or not these people qualify to buy a house without that paperwork. And we want it sent to us in a secured manner. So they're going to have to use the logins to upload securely, because the cyber hacking is getting out of control. And we're not going to take a risk and have them email us anything. We want them uploaded safely. That, or they need to drop it all off. Overtime, same thing. We have to have it broken out. We have to show an average, and we have to show that they're still receiving overtime, or there's a history of overtime. They can't have just started receiving overtime. Bonus income, variable hours. There's some businesses right now that are still not, they don't know if they're going to need you this week for 32 hours or 40 hours. And if that's the case, we have to have all of that information and average it out. Declining income, which has been a real struggle for us for the last 3 years. What someone was making in 2020 is not necessarily what they made in 2021, but maybe what they're on track for in 2022. Now we have to have all of the breakdown of the information and an explanation and prove that they're back on track to where they were at 2020 before we can determine what their income is. Gaps of employment. That's been another big thing in the last 2 years, because people were not working, but then they got brought back. So there's a gap. And each loan program will tell you how long that gap can be before you have to have 1 year of back to the VA is 1 year. You have to be, if you have a gap of your employment greater than 6 months, you have to be back to work for 1 year before we can count the income. FHA has different guidelines, as does conventional. And until we put those dates into the system, run the approval and look at the guidelines, we don't know how long they've got to be back to work. So I say all this to you, not so that you can memorize all of the different ways to calculate income, but so that you have a better understanding what a buyer's frustration might be. But if they didn't go to this full extreme in the very beginning, you're going to have a problem at the end because the income wasn't calculated right. About 25% of the business that we do every single month is a deal that we've had to rescue from somebody else, where they did not do this work, and now we're trying to scramble and put the deal together. And every single time we do that, it could have been prevented if they just asked the questions and got the proper paperwork. And in the beginning, before this customer is out $2,000 and the seller's boxed up their stuff and seller's already found a home contingent upon the sale of this one, that it's a mess because people weren't patient, they didn't understand, or they thought they were getting a better deal online. Yeah.
Can you explain to me what an example of a judgment is?
Oh, yes. Some of the best examples I think of, you could get a judgment. Someone could file a judgment against you. This is the simplest one. If you have a credit card, you didn't pay the credit card bill. Those credit card companies file a collection. They still don't get their money. They could file a judgment against you to get their money. And they know that they may not get the money until you go to buy something and the judgment has to be satisfied. So if someone owes you money, you could give a civil judgment. Gosh, Stacy, what's an example you can think of for a civil judgment? Let's just say, okay, documentium. I'm thinking lake because Stacy's out at the lake. Maybe there was a deal made between someone who owned a dock and they were just going to own or finance a dock to the next person. It's not real estate, so there's no lien placed, right? And this person stops making payments on the dock. They could go file a civil judgment against that person that stopped making payments. So they will eventually get their money.
Wow.
Yeah. Those are, I mean, those are pretty two easy examples. But that's a good question. I'm glad you asked that. Tax lien, that's pretty easy to understand. Any of your taxing entities could file tax liens. Okay, asset issues. There's not quite as many asset issues. Income, most deals fall apart at income. It's poor income calculations that kill a deal. So assets, some of the things that could cause a problem for the assets, and it really isn't going to kill the deal as much as it is just going to be a heartache for everybody and paperwork. Large deposits. So it's not unusual for people to save money at home, cash saved at home. I mean, I think it's safer. I have to hide money for myself or I'll spend it. So the problem with that is if somebody is buying a house, we have to trace, we have to document where the funds came from, because we have to know, number one, was there an enticement to buy from a seller? Was there some money enticement to buy from any of us parties to the transaction? Was there money borrowed that just wasn't through a financial institution? Was there sell of some assets that maybe weren't theirs to sell? You know, like, I mean, there's just, you could just go on and on. But cash, a large cash deposit made into the bank account right before someone is buying a house is not a good, that's not cool. That'll cause problems. Where you guys would see it, where you could give us a heads up, and this kind of rolls into the next class, is if someone is trying to pay you cash for the earnest money. If someone is trying to pay cash for the inspection, there's nothing wrong with any of that, but I can't give them credit for cash that I don't know where the cash came from. I can't prove it came from their mattress. I can't prove that that was their cash. So now all of a sudden you have monies that have exchanged hands that I can't give them credit for. So the other thing that is an asset issue is number of reserves. The reason that you want to ask the question on a pre-approval letter, you want to ask the lender, have you looked at their assets recently, is because if you have someone that has a 580 credit score and their debt to income is 44%, 43%, because that's going to be the max. And so the credit's real iffy. They're fixing to be maxed out on debt to income for that credit score. And we run their loan approval assuming that they have $30,000 in their bank account. And then we go to verify and they really only have 20. And we're going to need $18,500 for the transaction. And the house payment is a $1,800 month house payment. We don't even have 2 months reserves. So that basically means someone who's on the edge credit-wise, on the edge debt to income-wise, is now using basically almost everything that they have to buy this house. Would that make you feel comfortable if you were the one giving them the $200,000 to buy this house? No, neither are we. So if we're running the loan approval and the pre-approval based on assets that we think that they might have at the time that we go to do the loan, and all of a sudden they don't have those assets anymore, it could keep us from being able to do the loan. So you want to make sure that the assets that have been verified are actually the assets that they still have. So some of the other things that we are looking for is listed here, but the other thing that I just wanted to bring to your attention is gift money from parents. what I want you to know about this is if someone is borrowing, if someone is getting money from their parents, ooh, I would love a cup too. Just throw any kind of sweetener in it, nothing else. If they're getting a gift from their parents, there is paperwork that the parents have to provide. And Beverly remembers even 30 years ago, well, it's been almost 30 years that she and I have been doing business together. That paperwork is the same now as it was 30 years ago. And sometimes parents don't like the paperwork that they're going to have to provide. So if you know mom and dad have been with them to go look at every one of these properties, and you know mom and dad have said, well, we're going to help you out with the down payment, and you know that these kids are going FHA, you need to go ahead and tell mom and dad, hey, listen, just want to give you heads up. If you're going to help kids buy the house, be prepared for the paperwork the lender's going to require, which is going to which will include a copy of your bank statement. There is no way around it. They have to sign a gift letter, and we do have to have a copy of their bank statement showing they had the ability to give the funds. And some of their monies are not even in the bank. So yes, and yes, they may be in the safety deposit box. Speaking from experience. Thank you so much. I keep looking at that coffee, but I didn't want to disrupt the class, so. So if mom and dad have been on every one of the showings, the mom and dad has given their opinion, and mom and dad said that they were going to help the kids out, please have that conversation with them now instead of 2 weeks later whenever we find out that's where the funds are coming from. I mean, we should know that up front too, but in the event that's not the case, because some parents have said absolutely, positively, no, we are not providing our bank statement. And guess what we have now? A loan that can't close. Go in FHA. Yep. Verifiable. Yep. So I just wanted to bring that to your attention, because whenever you're talking about, remember, I said it last week, for those of you guys who weren't in the class, if you can predict there might be a problem, then I know you know a way to prevent that problem. And a lot of times it's just communication. So that's why these classes are so important, for you guys to understand the backside so that we can work together as a team to get these deals closed. And it just requires conversation. Now, there's a couple of things that now modern technology has allowed that eliminates a lot of paperwork and causes or keeps us from asking questions. Account check is one of them. With account check, account check actually is the service that a lot of the banks use for printing your your checks. I mean, it is part of a national vendor that banks use. We can verify assets through account check. So if the bank is on the national vendors list, when they go to do an application online, it will ask the customer to tie their bank account to the application. That will eliminate us from asking for bank statements, not for the parents on a gift, but for the verifying assets. The beauty of that is we don't have to get them to go to their bank or log online and show proof that the earnest money has cleared the bank account, because that is required on every transaction. We can go pull it ourselves. So not only do they eliminate providing us bank statements, but we can verify the information that we need as we need it during the loan process. Now, they're only giving us access for X number of days, and it says that on that whenever they log in. And we're only getting access for 30 days if the loan's in processing, 60 if it's pre-approved. So they may have to go in and re-verify if it takes you guys 4 or 5 months to find them a house. But it eliminates a lot of paperwork and eliminates a lot of questions that we might have, because all we're seeing is what we need and not the other stuff. You would be shocked at how many times we see bank statements where there's you could see their habits of gambling, or you could see, you know, how they spend their money. And then there's that question of, well, do they have some habits that could jeopardize them being able to keep the house? Well, I don't want to see that information. I only want to see what I want to do, what I need to see. I don't want that background. I don't want the underwriter to see that background because I don't want to cast any shadows of doubt. Then verification of employment, TI, TMC. All of your big employers are on Equifax system, which allows us to verify their income and their employment information online automatically. If when they're completing the application, they give us permission to verify that information, it eliminates pay stubs, it eliminates bank statement, W-2s, yeah, go. It will also break out the income that we were just talking about. A nurse usually has shift diff. So I have to break out that shift based in the regular pays and the weekend pays and all of that, which requires pay stubs. TMC validates automatically and gives us the breakdown. So there's some of those automations that are now built in. So when you're telling people to go online and complete an application, tell them to go ahead and give permission to validate as much as possible as part of the application process. And it'll eliminate a lot of paperwork and it'll speed the whole pre-approval up. In places like Seattle, where you got everybody working at Amazon and everybody working at all of these big employers that are real high tech, their pre-approvals come back within hours because all of this stuff is validated, because their banks work with the banking systems, their employers work with the validation systems. So they don't have to have paperwork, and all of the breakout of all of the information is automatically done. And then the system will automatically look at the breakout and issue the pre-approval letter doing the work for us. And that's the high-tech part of the artificial intelligence world that we're living in. The difference is in our rural area, most of our employers and a lot of our banks are not on those systems. So it takes longer. We have to manually calculate everything. And the customer does have to provide paperwork that they wouldn't have to provide in some of the bigger cities working for the bigger employers working with the bigger asset companies, financial institutions. Now, and then, so that means not that the other loan officers aren't as licensed as we are, but they're not as experienced as at having to do all the manual calculations because they're used to all of the automation and the computers making decisions for them. We have to manually do a lot of things that would be automatic in their world that's not automatic in our world. Some of the things that we try to do to not be so techie that people don't feel a connection with us as humans is just good conversation. It is really important to us that we know about their what their goals are. What do you know about these people? What are they trying to achieve with home ownership? Are they are they first-time home buyers and they're scared? But we got mom and dad that's trying to make decisions for them, and the kids really they need mom and dad's help, but they're really not loving their advice. I mean, like, tell us everything that you know about these people that we're working with so that we can connect with them at the heart level. We want to show compassion, empathy, care, and concern about what their wants and needs are. And then we're going to get their budget information. We're going to put all that together in one package. So that part is really important to us. They're not just a number. They really are people. These are people that we're going to see at the ball fields, and we're going to see at the grocery stores, and we're going to see at the charity events. And so we really want to know who we're working with. So the best way for you to get that information to us is shoot us an email, include the customer on the email, tell us their story, and then tell the customer who we are and why you've chosen to partner with us. And if you do that all on one email, we're all on the same page. And they see us as a partnership, helping them achieve what it is that they're wanting to achieve. But their backstory is really important to us because a lot of what we're doing is firing off questions that doesn't seem like we care, but it's because it's the information we need. That backstory helps us relate to them better and explain what we're doing and why. And then we're always going to do our weekly updates so that everybody stays on the same page. You'll get an update as a buyer or a seller's agent. And then we're also we give a more detailed update that y'all don't see to the buyer. And the reason y'all don't see it is because it usually has information y'all don't need to know that's personal. But you'll still know what's going on every step of the way. We're getting back to attending closings as much as we can. We all have busy schedules. All of y'all, all of us have busy schedules. If you know someone that we really need to be at their closing, please let us know ahead of time so that somebody can get it on their calendar. We've got great closing gifts. We really like to be there. A lot of times y'all's closing times change. So we'll think that it's closing at 2 o'clock today, and people will forget to tell us and it closed at 1 because everything was able to get bumped up. So if you've asked us to go to the closing, please let us know if there's any changes so that we can be there. Do you guys have any follow-up questions on Zoom?
Not at this time, thank you.
Veronica, are you good? Oh, there you are. You're good. Hey, I do have a Spanish speaking loan officer, but he's in San Diego. He's fantastic though. So if you have anybody, I keep saying I'm gonna learn Spanish and I haven't done it yet. See, yeah, I got that. But I do want to support that community. So we're trying to find a way to make that happen. And if you've got a fantastic loan officer that would be a good fit for us that speaks Spanish, please send them my way. Dawn, are you good? Do you have any questions?
I'm good.
Did you learn something new?
I think I got on late.
Do what? Did everybody like get super jealous and decide that they want to do mortgage loans instead? I wouldn't trade my job for y'all's either. All right. We are going to go right into what can kill a deal from here. So if you're not here for that CE and you would like to go, Stacy, did you learn something new? You've been through this part once before.
Yeah, I thought the second one was
The first one?
Yeah.
You know what? Most of the gotchas are all in the pre-approval class. I mean, if you're just paying attention